Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, January 31st. Time for the weekly wrap up. Hey, you know what? I guess it's time for the monthly wrap up too, considering it is the last day of the month. Yesterday, I think I got slightly off track, and I was wishing you guys a good um, having a nice safe weekend, but we're now there. So I think I must have looked at the calendar wrong or had too much stuff going on. Anyway, weekly wrap up, monthly wrap up, here we go. And remember that this month, this month, I really hope everybody had their risk management in place and their money management in place, so they didn't leave any money on the table, and the risk management so you didn't lose any more than you're willing to lose on a particular trade. Now, boys and girls, fellow traders, you know, if you've been watching my videos, that these videos are for educational purposes only, and your results may differ from mine, may vastly differ from mine. And that trading's risky. You can lose all of your money that you put into a trade. So if you're seeking financial advice, investment advice, trading advice, seek it from an accredited financial professional. You know, one of those people that has a certificate on the wall, you know, behind glass in a frame. They're proud to display that they are a certified financial professional. They've got accreditations, okay? Now, that way, if you take their advice and you lose money, or you give them money and they lose your money, you know you got your advice from an accredited financial professional, somebody that's been certified, rather than somebody that just has a funny name and puts out YouTube videos and post on the internet and maybe sends you something in the emails, or other traders that do that. So anyway, that's the disclaimer. So let's move on. For the week, we still have a bunch of unfilled gaps. Wow, 2020 really threw a monkey wrench into the gap fill. But just because a gap doesn't fill doesn't mean you couldn't make money, because you see right here, you bought in at that open price or near the open price. You know, price went up a good, from the open to high, that's what, about 37 pips or so. So there was money to be made. You don't have to put your TP right there. You know, you manage the trade, it gets within 5 pips. So you see here, once it cleared this 0.168 right there, you could have brought your stop maybe right below it, and then if it pulled back down, you would have taken the lion's share of that trade. So, you know, once again, that's how you use these wick zones to determine price action. I know it's really simple, and you're like, well, if it's that easy, why doesn't everybody do it? Well, you see, it's simple. Never said it was easy. You know, sometimes you have to be there at the right place at the right time when you're trading, to make those adjustments. Unless you have a programmable EA or something where you could tell it, hey, if you get past, say it got up to what? I got up to 25, right? So say if it got past, say, 20, 21, to move that stop up here, having an EA to manage the trade like that, if you can't sit in front of it, may have been beneficial. So that's how that would work out for you. Let's see, the new beast filled the gap, and the euro filled the gap, of the other two pairs that I've been watching this month. So next month, maybe we should switch up some other pairs. If somebody wants me to, you know, bring up some other pairs, let me know. Put it in the comments somewhere. For the year, the yen is, let's see, 46 pips below the daily, 41 below the weekly, 25 below the year and monthly open right there. Once again, you see that oscillation. So you see here, you look at all these wicks. I mean, look how many wicks price is cutting across. So when price came back down, that's the time to get out right there if you hadn't jumped out on these wicks. I mean, right here, you had to open, you know, inside these wicks, and then it fell through. It fell through them all. So that's, once again, how to analyze and trade based on what you see. Now, simple, simple, simple. The first day of the week, that opening range, there's the high, there's the low. Price opened right above the weekly open, came through. That was first trade opportunity. And it came through here, the low of Monday, the first trading day of the week. That was your second entry opportunity right there based on these horizontal lines. And as you can see right now, there's 24 pips with a potential of 18 more. So about 40, 42 pips potential on that short. But you have to be there and look. So once again, very simple. And you can do this on any pair, not just dollar yen. So let's see. Let's just take a peek at the euro. And the euro, first trading day of the week here, it broke through that high and up 44 pips. So hope the euro traders maybe took advantage of this setup. It's simple. And so you go, well, how do you know? I don't know, number one. Well, why does it do it? The why doesn't matter, but the fact of the matter is there's certain, price ranges. And as you can see here, for the most part, the euro was compressed all week. And now we pick up the beast, the new beast here. I mean, it's just exploded right there. Yesterday, exploded. And the explosion continued. So these are simple trades, and you might be hesitant to get into them or try them. You're like, well, I just don't know. Well, of course, I don't know either. That's why put the stop loss in. Risk management. It's because no matter what method you use to enter, no matter what system, what indicator, your risk is going to be the same, because risk is the amount you're willing to lose on that trade. Okay? I can't make it any simpler. Dollar yen, you can see here right through that weekly open. If I switch back over to H1, here we can see what it looked like on that daily basis. And so you can see all that price action here right through the weekly open. I mean, there was only Wednesday did it not touch that weekly open. Now this is interesting. It got inside that monthly inside bar and now is moved back up one whole pip. Question is, would I go long here? Sure, why not? You could say it's all red, so you wait for your opportunity to pick a long, because you see it dipped down into this wick zone. And so last time price was in this area, it shot up. Now it could come back down here, and it could keep going, or it could go back up. But it's trading. We don't know. Let's see. The new beast is way outside. It shot through the highs here, the weekly inside bar, the monthly inside bar. So if you were late to the game and you took those trades, there you go. You're still up some pips. Now the euro, as you can see on this daily chart, we are in that last daily inside bar area here, and there's the weekly low. It went up and pulled back 4 pips. So maybe if you're down on the, using a 1 minute chart, you're trading, the cross right here of that line. And that would look like, what do I have here? Right here. So there's that inside bar. You see you had one trade, a couple more opportunities. I can expand that a bit so you can see what that looks like. So you could go with the candle color. So it was going into the inside bar, and we're only trading the breakout, not the break in. So right here, there was an opportunity. Right here, there was another opportunity. So depending on where you put your short, your risk, you maybe say, well, if it comes through here, I will exit because it'd be making a new high off of the most recent high, be a higher recent high. But since it didn't touch it, it would have come back in here, and now you'd be looking at profit. Yes, that's hairy hindsight, but this is how you trade in real time. So the steps are, you note that high, price comes here, put your stop loss maybe 1 or 2 pips above that high. Price didn't hit it, and you see here you'd be in profit. Because you don't know, and that's why you put the stop loss. But remember, boys and girls, fellow traders, your results may differ from mine. Okay, looking at the daily, the range 1, 2, 3, 4, 5, 6, 7 over 100. You see the breakout here of the previous day's high, breakout here, previous day's low, forming an outside bar. Weekly H1 lowest open, opportunity there to make a small profit. So on these type of days, and it's the end of the week, you know, maybe or maybe not you want to hold that trade over the weekend. That's up to you. You just have to see what you think is best, and maybe you get out of the trade, maybe you stay in it. Okay, we had a missed pivot from 1 day ago. That got taken out. You can see the pivot point here just below the weekly open. That got taken out. And then right here, and there's our future pivot. Oh, there was a trader that was asking me about getting rid of a bunch of the lines. I'm not sure if you have the latest, greatest TRO HL5, the latest version. But you see here, what you do is you just say show pivot true, and then the pivot support resistance you say false, mid pivots you say false. And so the only pivot lines you will get will be the pivot point and the future pivot, because the PP missed. Oh, you might get a pivot point missed here if you do yeah, 1 bar. So you'll have 3 lines. No, I don't just have just the future pivot and not the daily pivot. So I'd have to butcher the indicator if that's what you want. Rat zone. Range is large enough, 81. And as you can see here, green rats are ready to eat. Pivot we showed once again took it out, down to weekly S2, daily S2. Missed pivot from 4 days ago here on the dollar yen. We took out that missed pivot right there from yesterday. And I show this every day. Price opened here, opened between the 90 and the 00. It ain't staying there. And once again, that proved to be accurate. So, I mean, you could just say, hey, anytime price gets between here, it's not going to stay because that's where it opened. So there was a profit there, right here. You might have sweat some, but here paid off nicely. Wick zone in and out. Across those horizontal lines, there's the monthly, previous month's low, came back up through it. As far as the Einstein line, you can see here, there was a nice short trigger there. From at the tick level, you see we've got about 4 ticks to the move down, and now it's coming back up. On the range here, Weekly range 80.